Welcome to Save U.S. Taxes Legally on May 12th, 2025. Let's start off with three very simple questions. Number one, do you want to leave a legacy for future generations? Yes or no? Number two, do you want to save taxes year after year, generations after generations? Number three, do you want to learn the secret of the rich? You said yes to all three questions. Stay with me for the next 20 minutes and you're going to learn the secret. Imagine saving four, five, six figures in taxes year after year, generation after generation. Imagine no one knows what you own, where you own it, what you do, how much you have, and how much you sell it for. Imagine all lawsuits become frivolous and go away. How much time, anxiety, worry, money do you get to save? This is what the tax shield method can do for you. I believe all U.S. investors, U.S. business owners, U.S. entrepreneurs, U.S. franchisee owners, and U.S. 1099 income earners needs to know this information. Maybe you don't have to have the trust, but you need to know about this so you can make the right decision. I believe since I learned the secret of the rich, it is my duty and my honor to teach this to others. If I had to pay $94,000 in taxes until I learned the secret, and now I want you to save that. I believe the playing field must be level for every business out there. The Amazons of the world get free land. My brother's brewery lost its lease and had to close down. So, welcome to Save Taxes Legally. Let me share my screen with you. Maybe. My website, www.trustisyou.com. You're going to leave a legacy. I can't stop you from being sued, but you're going to be judgment proof and you're going to have 100% privacy. I know what you're thinking. You're like, how come no one's ever talked about this? My CPA hasn't told me about this. My financial planner hasn't told me about this. And there's a very good explanation for it. Currently, there are over 1 million active attorneys in the United States. Only 4% are trust attorneys. A textbook they study in law school is Scott and Asher on Trusts, 5th edition. That has an entire chapter dedicated to it. If you're near a law library, or if you can look it online, Black's Law Dictionary also talks about the Spendthrift Trust. This comes from England way back when King Henry VIII started the Church of England. 1563, I believe. I might have the year wrong. He went to go tax the lords and ladies of England, and they went further back to the 13th century to the Magna Carta and said, oh, no, 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 King Henry VIII, you can't do this. It's contract law that came to the colonies while we were still part of England. The law firm I work on behalf of inherited a trust that turned 350 years old in 2023, before we were a country. Our current tax code that we are under went into effect February of 1913. It's only supposed to be around for a few years, but 111 years later, the only thing it's done is grown and grown and grown. The super rich families of 1913, the Rockefellers, DuPonts, the Carnegies, and the Kennedys, made sure they could save taxes. Guess what? They can save taxes. We can save taxes. Again, my name is Sally Gimmon. My personal story is I became a real estate investor in late 2018 when my mom got sick. In 2019, with my mentor, Jay Tannenbaum, I wholesaled 7 bank properties nationwide and paid off $184,000 in debt. I had $50,000 set aside in my bank account to pay short-term capital gains. When COVID started, everything about bank-owned properties shut down. And on April 4th of 2020, my CPA called me to tell me, congratulations, Sally. You made so much money. Now you're at 24% tax rate, and you're going to owe $94,000 in short-term capital gains. I only had $50,000 set up. Not what I was planning on doing. Whoops. Trying to go to the next page. Now this is 2025 current tax brackets. There's 4 ways to file your taxes. Most expensive way is single. Then comes head of household, married filing separately, and then the cheapest way is married filing jointly. They change a lot of things January 1st. Look at what happened to married filing separately. They're paying the exact same amount of money in taxes all the way up to 35% tax bracket. At 37% tax bracket, it's still cheaper to file married filing separately. Get nothing else from today's presentation. If you are married, please file married jointly. You will save taxes. So my tax bracket went from 22% being single up to 24% being single, and I had to pay $94,000 in short-term capital gains. My solution was to take a HELOC off of my paid-off house, which defeated the purpose of being paid off, and I didn't have the bill anymore. Now, when you Google, and please do, I want you to research this, when you Google tax code 643B, you will find IRS opinion letter dated September 11th, 2018. There's also 5 memorandums that come from this. It's an opinion letter. In my opinion, lima beans are horrible. Maybe you love lima beans, but I'm not eating a single lima bean. So they specifically said in this letter they do not like tax code 643B. They do not like the irrevocable complex discretionary non-grantor spendthrift trust. That's fine. The IRS cannot change the tax code. Only Congress can. Too many, like current president and other presidents have the trust. Too many senators, too many congresspeople know the secret of the rich. Only thing they're doing is taxing the middle class more and more. Now you're learning the secret of the rich. So let's go over these 5 elements that you must have. Irrevocable means it goes from generation to generation to generation. The Rockefeller Spendthrift Trust is 7 generations old. It has over 400 people under the same EIN number. Each separate family is going to file their own 1041 tax return. People always ask me, is it hard to get things in and out of an irrevocable trust? I've wholesaled 28 properties since having my trust. Complex. This trust can hold money from day to day, week to week, month to month, year to year, decade to decade, century to century. 97% of the trusts sold every year are what my mom and dad had and what Susie Orman talks about on PBS television. The family trust or the living trust. There's nothing wrong with the family trust. It is designed to avoid probate and then it dissolves and goes away. This is not your mom and dad's trust. Discretionary. Whoever is the trustee or trustees can make the rules for beneficiaries now and then also from the grave. There is no contesting the will or anything else. I have a husband and wife who have 4 apartment buildings in Los Angeles. Thank God they weren't affected by the fires. Their adult daughter is living in one of the apartments rent-free that has a slight problem, so they're requiring her to do 4 random drug tests a month to stay in the apartment. She actually took her mom and dad to federal court to sue them. The judge read over the trust, and he told her she had 2 options. Option A, pass the random drug test. Option B, move out and start paying rent. I do not want to be invited to their Thanksgiving dinner. Non-Grantor. This makes the trust completely private. You will have someone who will never be a trustee, never be a beneficiary, who is going to sign up to be your grantor or settlor of the trust. You will need their social security number. This is not a speed bump. I've done this for several of my clients. The only thing they do is sign up for it, and then they have paperwork and sign away. When someone tries to research the trust, they'll know the law firm, and they'll know who's a settlor, but they won't know anything else. And then the 5th element, the spendthrift, like I said, has been in front of the United States Supreme Court on 2 separate occasions. Both times it's been favored. You can't get more legal than this. Now, the business trust is for all U.S. business owners, entrepreneurs, franchisee owners, and 1099 income earners. If you're making at least $100,000 gross, you should be looking at the business trust. It's going to save you at least 90% on federal income taxes, and in 43 states no longer pay state income taxes. This is an actual client who called me. He's 27 years old, ladies, and single. He lives in Virginia. In 2025, he made $150,000. If he makes $150,000 in 2024, he makes $150,000 in 2025, he's going to save at 90%, $25,962, plus Virginia state income taxes at 5.75%, which is an additional $8,625. If he makes more than $150,000, he'll save even more money in taxes. Unfortunately, I cannot help W-2 income earners. taxes are taken out before you get your paycheck. Now, as I said, Paul Benson was a Harvard law professor who wrote 5 separate trusts. Today, we're only going to talk about the business trusts for business owners, entrepreneurs, franchisee owners, and 1099 income earners, and the beneficial trust for all U.S. investors. The other 3 trusts, there is a senior trust for anyone over 65 who's making too much money. It can affect their Part B of Medicare. That's your hospital. That's your doctors and tests. Then there's going to be the charitable trust. So many of my clients are saving thousands and thousands of dollars. They start their own charity. And then finally, there's the mineral rights trust. I've only sold one of those. One of my beneficial trust people, who's a real estate investor, inherited his granddad's horse farm in Oklahoma that had 6 oil wells on it. So the business trust is for U.S. business owners, entrepreneurs, franchisee owners, 1099 income earners. You will save federal and state income taxes. Congratulations. Now, I'm a real estate investor. Like I said, my mom got sick in North Carolina. She was originally from Goodyear. So I bought this in July of 2020 for $20,000 at the middle of COVID. And when COVID restrictions got lifted, it was going to go for $50,000. That $30,000 spread in between, at 24%, I would pay $7,110. When it finally went to auction, August 28th of 2021, the final bid was $64,326. Woohoo! Without lifting a hammer, I made $44,326. But more importantly, at 24%, I got to save $10,368.24. I took that $10,000 and put it into more real estate and just kept growing my empire. Now, beneficial trust is going to save the following 5 taxes. You will no longer pay capital gains, short-term or long-term. You'll no longer pay interest income taxes, dividend income taxes, rental income taxes, and royalty income taxes. Royalties are not on this page because they're taxed a little bit less, between 10% to 35%, 7 different layers. So short-term capital gains are when you sell crypto, you're a forex investor, you're wholesaling, you're fix and flipping, you're doing auction houses or tax liens. Interest income taxes are for passive investors, people in mutual funds, in a REIT. When you do subject to real estate, the BRRRR strategy, I have notes where I'm the paper in the house. People pay me their mortgage. You're doing creative financing, seller financing, or you're a forex investor. Yes, forex investors, you get taxed twice. Dividend income taxes are when you're in the stock market, you're a day trader, you're an options trader, you're a futures trader, or you're doing commodities or living on dividends. Rental income taxes are when you have short-term rentals like Airbnb, vacation rentals, 3 doors, 4 doors, 10 doors, 20 doors, 30 doors. Maybe you have commercial property. Maybe you have apartment buildings or multifamily, or you're doing Airbnb arbitrage. I just want to show this example that if you make $50,000, depending on which tax bracket you're at, is how much you would save. At 22%, you would save $11,000 on that $50,000. At 24%, $12,000. At 35%, $17,500. Now, long-term capital gains are a year or more and affect you if you're selling your business, you're selling an investment property, or if you're selling a baseball card. This is a true story. The son saw my TikTok video. He knew his parents were selling a family restaurant that's 42 years old in March of 2023. At 15%, they would owe the federal government $450,000 on April 15th, 2024. At 20%, they would owe $600,000. Jim and his wife, Mary Ann, were working with a business broker, Sam. We contacted Sam to change the contract. Sam's like, I need the business trust because he's going to make $30,000 off this deal. Told him about my affiliate program. Sam tells Michael, who is buying this restaurant, it's going to be his 7th restaurant. Michael buys a business trust, and Sam made an extra $1,000. Now, my website is www.thetrustisyou.com. When you go /scheduling, you can set up a 30-minute tax breakthrough session with me. It's not a sales call. I'm going to show you, take you out to NerdWallet, show you the formula for taxes, and show you how much you can be saving. My free class is on the Great Discovery. You can get there at www.sallygimmon.com. When you go out there, you're going to get a presentation similar to this one. You're going to get 3 articles from Forbes magazine I did not write. You're going to get 2 pages of case law so you can research this to your heart's content, and examples of a client saving thousands of dollars. Again, this is the secret of the rich. I want to say congratulations on taking some time to learn something new. If you have any questions, whoops, yeah, sorry, did that wrong. Get back where I was. If you have any questions, please get back to me, and I will help you save taxes as much as you can. I hope you have a wonderful week, and take care. Bye-bye.